insurance isn't the most exciting thing in the world, but it obviously affects your guys' everyday business, and your guys' business affects ours as well. So I thought it might be helpful to just kind of give you a rundown of what we see moving forward through 2020 as what's going to influence insurance costs, where the insurance market is headed, and then we can do maybe a quick Q&A for you guys on anything you have insurance related. Insurance, interestingly enough, is becoming more expensive while you're, in this area, home prices seem to be kind of depressed, which part of that.
Words wisely there.
Part of that is really because the weather that is affecting the United States in the last few years has become more and more drastic. You see, you might not think that your insurance rates are affected here in Connecticut by things that happen in California, such as the fires, or even in Colorado, or down in Florida, but all in all, the insurance companies that are insuring those homes out there are also insuring your guys' homes here. So ultimately, they're going to be paying higher reinsurance rates, and they spread that risk across everyone. So whether or not you're here or you're in California, there's likelihood that because of what's going on, you're going to see increased insurance rates moving forward. Some of the other things that affect the insurance rates in the area, obviously, whether or not you know that, is if you're coastal, you have a surcharge on your home, most likely anywhere up to 25%. They think that you're more likely to have hurricane damage, as you guys saw during Sandy and things of that nature. Old Greenwich had a lot of issues, and even back Greenwich had issues during the hurricanes.
What's the definition of coastal?
So coastal
and this is not, that's not speaking to elevation, right?
Coastal it's not speaking to elevation. Most coastal is inside of 1,000 feet. So it actually depends on companies though too. Some companies won't write houses within 5 miles of the coast. Most of the higher end companies that we deal with and the homes that are insured with in this area is 1,000 feet, and that's where the surcharges start to apply, and even hurricane wind deductibles, which can be anything from 1% to 2% to 5%, and 5% on a $10 million replacement value of a home is $500,000 deductible if there's a hurricane. Secondly, obviously, in the last 6 or 7 years now, the flood insurance has become a large issue as well. Whether it's the ability to obtain homeowners insurance because you're in a flood zone, or whether or not your flood insurance premiums are going to continue to rise because of you being mapped into a flood zone, and you have mechanicals in your basement that are affecting things. You're not at the new elevation levels that the state and the Fed has put into place. It's become a huge issue. The NFIP, I should say, is the National Flood Insurance Program, is I think like $8 billion underwater because of the flood issues that they've had. So they're surcharging every flood policy every flood policy is now surcharged, and if you have a secondary home that's in a flood zone, that's surcharged 25% on top of that as well. So they're really trying to make up for obviously the deficit that they have. So that's a huge hurdle for people, in things that they should take into account when looking to buy these homes in these flood zones, because it's not unlike a homeowner's policy. It's not privately owned. It's not a private company. They can't designate rates as well. The federal government is giving you a rate, and there's not a lot of room to play with there, even if you take higher deductibles. So and unfortunately, those flood policies are just continuously going up and up and up. And until you get into a situation where you put your home above the elevation level that's given by the federal government, and you raise your mechanicals and you do all this work, you're going continue to see rising flood insurance premiums.
What's the best way? We talk a lot about that 50-50 rule, right? Like you can do only so much work on your home before you have to elevate the level of the home to those standards, whether it's the Greenwich standard or the federal standard. But what's the best way for an agent and or a buyer to determine what amount of work has been done to a home so they can figure out how much is left in the renovation side of things before they need to do that work?
Well, that's actually a really good question, and part of that I think you would have to you'd have to figure out with like not only the contractor and the town, but you'd have to say, like, from my perspective, from the insurance perspective, what I would look at is if you could do anything right away when you get into a house that's maybe negatively elevated, it would be move your mechanicals up. I mean, sometimes it's as ugly as, you know, putting it up on like a box outside the house and things of that nature, because that's where the insurance company sees issues with flooding. What happened was during Sandy and even Irene and things of that, other hurricanes, what happens is if there's a flood and it comes in and it gets into your mechanicals and it causes a fire and the house burns down, the homeowner's policy is on the hook for the fire because that's what caused the damage, as opposed to actually just flood damage. If the mechanicals don't have any issues and the water just runs underneath the house or gets in the basement, something like that. So that's why these insurance companies are now stepping away from homes that have negatively elevated mechanicals. So that's kind of where you want to advise people from both an insurance perspective or even a construction perspective, like what are the small things they can do if they don't have any room. Where you can find out how much room they have, I think that's more of a town hall related issue.
But are the flood insurance policies transferable when they buy the house?
Yes, they are.
They're protected price-wise?
Can you say that again?
Are they protected in the old?
Well, they're not. That's kind of an interesting question because they are protected for a little while, but you're still inheriting something that's going to continually get more expensive. Because what they think they're doing is they're trying to get to a rate adequate number, but when you're dealing with a company that's $8 billion underwater, that rate adequate number is only going to continue to be higher and higher. So there's no like perfect equation for that, you know. But it is nice to live on the water, so.
Just a quick question.
Yeah.
So the flood policy that typically you would buy is just up to $250,000 of damage?
That's correct, and that's through all those policies, whether or not they're through a private insurance company or not, they're all insured through the NFIP, the National Flood Insurance Program. So they write that up to $250,000 and $100,000 worth of contents, and that doesn't really. The only thing that includes in your basement is really mechanicals. So if it destroys your mechanicals, that's all that it will cover. If you have a finished basement and you're on the water and it destroys the basement, you're SOL.
Is that not covered by homeowners?
No, that's flood.
No.
So flood insurance, you know, if you have an issue in your basement,
So rugs, furnishings, stuff like that, not covered by flood insurance?
not for anything above the first floor would be, which obviously would be substantial if on but anything, if you have a finished basement and you're on the water, it's not covered by flood insurance. You can, on top of that $250,000 policy, you can write excess flood coverage up to whatever number you want. Like if you thought the home had a potential of literally being washed away in a bad storm, you can write that. It's just more expensive. Yeah.
But excess coverage doesn't cover anything other than mechanicals?
No, excess coverage covers the whole home.
Oh.
So this, for instance, like this house, if you know this is on the water in say Riverside, if they wanted to have a flood insurance, excess flood insurance policy that covered it for $5 million or whatever the number is, they could get that. It's just it's more expensive.
So the $250 covers your mechanicals?
No, the $250 covers, well, yes, mechanicals, and then anything on the first floor. So all, like if you had a flood and it came in on the first floor, most of the time you see what they do is they have to come in and rip out the floor. They got to take out all the walls and things of that nature. That's what that $250,000 covers. And then anything that's on the first floor, you know, any tables or chairs or TV, whatever, contents related, if you keep that. That's where that comes in. And then most people that want excess flood coverage they don't usually take a lot of contents coverage. They're usually just concerned about protecting the actual structure of the whole home.
Does any water damage not get covered by homeowners?
Well, that's an interesting question. The newest, which kind of leads into the next part, the newest and largest issue that homeowners insurance claims come from now are pipe burst. The last like 5 or 7 years, I'd say 5 years, you've seen most of the claims in the insurance industry are all pipe bursts where people aren't home and you know, the house gets too cold or things of that nature. So what the insurance companies are now doing are they're offering large credits, like 8% on homes if you have water shutoff valves. Because, and they're actually, a lot of them are, any new construction, when you're dealing with an insurance company on like a builder's risk policy or something like that, if they're gonna write the home long term, they'll require that they put that in. That seems to be the new issue. I think a lot of it has to do with, New York's not the greatest example, but in New York they have a lot of older buildings and the plumbing and things of that nature are having issues, and they're seeing a lot of water issues, whereas here it's usually temperature related, or even older homes where, you know, sometimes the plumbing just is a lot older, and they see, you know, if you're away and you have a pipe that burst and it's running for 3-4 days or a week or something like that, the numbers are staggering.
But will your homeowners cover that?
That's covered, but any groundwater from rain that goes into your basement, that's considered flood. So that's something that's been a kind of a hot topic as well, because of obviously the rains that we've had in the last 2 years. A lot of people have had water in their basement because of it. That's not something that's covered under homeowners policy. That's considered flood.
Does a water shut-off valve shut the water off automatically if it's running for a time?
It does, yeah. So usually.
So you don't have to be there to turn it off?
No. And most of them are tied into your alarm. Like, so the alarm company runs that as well. It's usually like, you can put different timers on it, so half hour or something like that. But in the long run, it can, you know, make a grand scale claim a lot smaller.
You're making me think of Susan, you showed that house on Mar a couple of years ago, right? You walked in the front door and there was a frozen.
There was a bathtub on the floor of the kitchen and there was water just running down and a frozen waterfall in the back.
It was not our listing, thankfully.
No, but I was there to show it, and the agent had gotten there before me and had opened the door to that, and it was like an ice rink. It was crazy.
Yeah, we had one of those too. The client came home and he opened the door and water came running out the door.
The Greenwich High School had that, a couple of schools have had it.
Yeah, Cobb actually had it last year, yeah. And then just a couple other things that would actually help you on your homeowners premiums, and what we see moving forward is, and it's not something that everyone looks for, is if you're within 5 miles of a fire station, and if you're close to a fire hydrant, 1,000 feet of a fire hydrant. It's interesting because you don't see as many fires anymore. I think a lot of the homes are probably a lot better protected. We've seen a couple in the past. We had one really large one about 3 or 4 years ago. But being closer to those things obviously affords you better rates on your homeowners premiums. And it's, so when you're in like real back Greenwich, if your clients can put in dry hydrants, actually, they can get those credits. As long as they can pull from a substantial source. If they have a large enough pool, or they're near a lake or a pond, that they can do it. The fire department will advise them on how they can put that in. And in the grand scheme of things, on larger homes, the cost to put it in is not that substantial.
So it's like a cistern, right? Homeowner has that kind of a big buried cistern.
Yeah, that's exactly right. Yeah, they can pull from a tank, just like you're saying. Yeah.
I just had a question about the flood insurance.
Sure.
If you do not live in a flood zone, and so you don't have flood insurance, how do you cover yourself if your basement floods? Is that
can buy you don't have to be in a flood zone to buy flood insurance. And it's actually, with certain companies, you can buy a flood policy through them that you can actually buy coverage for finished basements. So that's an option.
So it wouldn't go through the federal government, it would be their own
Yeah,
flood policy?
that's correct. Yeah, and if you're not in a flood zone, it's really not that expensive. It's probably $300 or $400 a year, maybe 500 tops if you're not in a flood zone. But like a normal flood zone policy in an X-rated zone, which isn't that bad, it is a similar type expense.
So that would cover like an outage and your sump pump stopped working.
Right. Yeah. Well, an outage and your sump pump fails, that's actually covered under your homeowner's policy. Yeah. What's that?
That's not considered a flood.
No. Well, no, it's not. But if you would have probably flood damage because of the sump pump. But if you're right, if the power went out and your sump pump failed, that's a homeowner's issue because you lost the power. And then just a couple other things as far as I guess kind of keeping your homeowner's premiums in line year over year is if you, well, having good credit is a big thing for insurance companies, and if you can, the less frequent you pay your premiums. If you pay them annually, they look at that as a good thing. Semi-annually is just a little bit less is good, and if you go down to monthly, or if you do monthly, if you get on EFT, they look at that as a good thing as well. So those are all things that they take into account.
It's automatic payment.
Automatic
EFT.
payment, right, yeah. And then lastly, the other thing that a lot of these insurance companies are now offering that comes into play is just tenure with them. Like if you stay with them, they're now offering credits to people that have been with them for, it increases up to 10 years. If you've been with a company for 10 years, you maximize your credit, and going forward, that's what it is. But and some of them are even offering credits on your deductibles if you've been with them for a long time. So that's kind of the gist of it. I don't know if you guys have any other questions as far as those go.
Any other questions for Kyle? You gonna hang out?
Yeah, we'll be around.
Okay.